Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Tuesday, November 15th. I hope everybody had a great day. There was a lot of interesting news that came out around the world regarding the markets and just other things as well. Some geopolitical tension, as you see in the headline of this article. But what I saw is that there was a Russian missile allegedly intended for Ukraine that got shot down by Ukraine and crossed over into Poland and actually killed 2 people when they landed. And I know that this article goes more into that as well, but the stock market did finish up today. The S&P 500 was up 0.87%, the Nasdaq was up 1.45%, and the Dow Jones was up 0.17%. And also, as always, if you like this type of content, please subscribe on YouTube and follow wherever you listen to podcasts. There's an episode like this that comes out every single day that the market is open. And there is a more in-depth, longer episode that comes out over the weekends. But let's get into it today because there was a lot that came out today. So, U.S. stocks gained amid fresh geopolitical tension that put a halt to a significant stock rally on Wall Street Tuesday as investors assessed reports that Russian missiles crossed into Poland. Poland Prime Minister, and I'm not going to try and pronounce that name, but the Poland Prime Minister convened a security meeting. According to the Associated Press, a senior U.S. intelligence said Russian missiles crossed into Poland, killing 2 people. The deceleration, and then the stock market came after Wall Street rallied on new signs of optimism that inflation may be cooling. October's producer price index declined to 8% annually, down from 8.5% in September, after economists surveyed by Bloomberg forecasted 8.3%. Annual core PPI also surprised at 6.7% year over year, compared to a consensus estimate of 7.2%. The PPI report comes after other key inflation data came in lower than expected last Thursday, with consumer prices rising 0.4% in October and core prices adding 0.3%. Core PPI and the core PCE deflator follow very similar tracks, though the surge in rents this year has driven an unusually large wedge between them. Chief economist at Pantheon Macroeconomics wrote in a note following the PPI release. But the pace of rent increases has peaked, and our chart suggests that the steep drop we expect to see in core PPI inflation will drag down the core PCE measure faster than markets and the Fed expect. While these are good data points, I think it's important to keep in mind that this is just one data point, and I think that what the Fed really needs is there to be a pattern and a trend. So I think that this is good information, but maybe don't get caught up in all the FOMO that's going on. And it's always just good to be a little bit prudent when it comes to these huge rallies during bear markets. The reality is that we still have very high inflation, 7.7% year over year. And any other year, if that number came out, it would be bad. But just because it's been coming down a little bit from its peak, the markets are really surging. So I think you have to be a little bit careful. And dollar cost averaging for me is always just the best strategy to stay invested. But let's keep going. Yields on the benchmark 10-year Treasury note moved higher Tuesday to around 3.7%. While the dollar index, which measures the currency against 6 counterparts, including the yen and the euro, slipped 0.25% to $106.39 Wednesday afternoon. The early uptick resumed a rally after stocks finished lower Monday as investors digested fresh commentary from Federal Reserve officials on the outlook of interest rate hikes. And honestly, I wouldn't be surprised if we got another 75 basis point interest rate hike in December. And if that happened, I think the market would really have to sell off because it's expecting now to be done with the 75 basis point rate hikes. That it wants a 50 basis point rate hike and then maybe a couple of quarter percents. And I think the Fed still has a big job to do, and they've been saying that. to get inflation from 7.7% to 2%. So you kind of have two differing opinions right now. There's a camp that thinks that inflation now is going to drop very drastically, and there is a camp that is kind of listening to what the Fed is saying, and that they still have a long way to go, and that they're still going to hike rapidly. So, Fed Vice Chair Leo Bernard on Monday stated that she thought it would be appropriate soon to move to a lower pace of increases. Soon maybe means December, but maybe not. And I think the market is really pricing in that best case scenario right now. Some strategists argued that Monday's lows weren't due to Bernard's commentary, but more of a signal to what could be ahead. The latest in a mounting wave of evidence that the FOMC will move 50 basis points in December rather than the 75 basis points pace they've been at since June, strategists at Bespoke Investments wrote in a note to clients. So a lot of people really thinking that the interest rates are going to have to start coming down soon, or at least rather slow the rate at which they're being risen. And while that is true, that's going to happen soon, how soon and how slow are they going to, or how much are they going to slow down? Where's the terminal interest rate going to be? It still could be higher than what the market is expecting. I think they just need to kind of cool it with the 75 basis point rate hikes, because they've never gone this fast in history. So obviously they need to slow down soon, but that doesn't necessarily mean that they're going to completely stop or start cutting rates anytime soon. I think that's important to remember. So a lot of differing opinions as far as sentiment goes. There was more geopolitical things that happened this week. Biden talked to the president of China, Xi Jinping, which is a big deal as far as relationships and tensions go between the U.S. and China. And I think one good thing that came out of that meeting is there's no imminent threat to Taiwan, which would be very bad to the U.S. if they invaded Taiwan, because of Taiwan semiconductors and the majority of all semiconductors really coming out of that company. I do believe Warren Buffett, it came out today that Berkshire Hathaway is beginning to build a stake in TSM. So it's definitely really good news if we can work on that relationship a little bit. But let's take a look at the charts. Let's take a look at the S&P 500. It broke above our zone and is kind of retesting it now from the top down. It closed at 39.91. The top of this zone is about 39.80, but it did find some support there, and it's kind of just sitting there right now. Let's bring up the 200-day moving average as well. I like to have this on the chart. So we're getting very close to that 200-day moving average. And at this point, I would still be surprised to break through that. So definitely I consider that a level of good resistance. I think it would take a little bit more than what we have in these markets right now to really break through that, close above it, and move higher. So that's a level I'm looking to as resistance. And we're getting kind of close, so it's good to keep an eye on that. As far as Bitcoin goes, it's really kind of trying to stay above this 16,000 level. I still think there's a lot of pressure on it now that it's broken through this 17.7 zone. You can see that it already came back up and tested it and sold off. Maybe it'll retest it again, but I think if there's kind of a sell-off here on the stock market and it gets aggressive to the downside, maybe some things develop with Russia and Europe that we're not really expecting with this whole Poland situation. Like maybe that triggers a sell-off combined with technicals. The level that we're at is consistent with what we'd expect to see if there was some selling coming into this market. And obviously the Fed, we're starting to see them still talk pretty hawkishly, that the market has rallied since that CPI number. They're all still saying that they have a lot of work to do and not to expect rates to completely stop just yet. And I think a combination of those things could definitely push this market lower. And if that happens, I think it would it would be reasonable to see Bitcoin keep falling as well. I mean, there's already so much pressure on this market with what's happening with FTX and um, just the brand of crypto, just in general, the trust. I think it's going to be hurt at least a little bit by this FTX situation. I do think there's some people that are going to come into this market as far as Bitcoin goes and maybe convert their crypto to Bitcoin. I've already been seeing people that have been doing that um, because they don't like the idea of having a centralized cryptocurrency, even like Ethereum. Um, they don't like it being controlled by one entity, one person. Um, the fact that you can stake your Ethereum tokens and earn interest, but you can't transfer or withdraw the funds. Um, there's just some things in this market that are a little bit questionable. And I think Bitcoin is seen as a safe haven for some crypto investors. But I think if you go outside of the crypto community, you're not going to have that same sentiment around Bitcoin. They're just going to lump all crypto together and say this is all a scam. And that can just hurt the perception of Bitcoin. And obviously, these technicals, like we've discussed for a long time, why this is a big deal. And we're still in a structural bear market. So I definitely still have the same price target on Bitcoin. Just because it's rallied the last couple of days doesn't really change that opinion. But I just kind of like to talk through some of the scenarios that could happen. So I'm gonna leave this here. Again, a lot of things happened today. Also, I'm recording on a new mic today, so hopefully the audio quality is improving. Um, but yeah, definitely gonna keep an eye with this whole Poland-Russia thing. Hopefully that doesn't escalate and that it doesn't turn into something where there's more countries getting involved with this conflict. That's the last thing that anybody needs or wants right now. So I'm going to leave it right here. I appreciate anybody who watched or listened to this episode. Remember to please subscribe on YouTube and follow wherever you listen to podcasts. And until next time, thank you for listening.